Welcome all to the Women Who Lead in Finance. I am one of your hosts, Pamela Sams, and my co-hosts here, Amber Whitehead and Chanay Robinson. We have a full show for you tonight, going over some of the what we call money moves that you need to make before the end of the year. Here we are on November 3rd. The year has really passed by, just like 2021 has just flown by. And so we need to prepare for 2022, but we need to close out 2021 effectively financially. Again, my name is Pamela Sams. I am one of your co-hosts. I am a financial advisor. I've been practicing for the last 19 years. I live in Northern Virginia. Most of my clients are women, single by choice, divorced, and widowed. And really what I do is help them achieve financial wellness through solid financial planning. And then I will introduce my co-host, Chanay Robinson, so she can introduce herself, and then Amber. And then we'll get a little bit into content of what I talked about on some of those money moves that you need to make before the end of the year. So I'm going to turn it over to Chanay.
Hello, everyone. Thank you so very much, Pam, for that lovely introduction. I am Chanay Robinson. I am the professional credit diva. And for those of you who may not know, for me, Diva means doing it very aggressively. And no matter what it is you want in life, you have to definitely go after it. And that's what I do. That's what I teach my clients. I am a credit restoration specialist. I'm the owner and operator of the Professional Credit Diva, where I assist focused individuals, couples, families, and business owners. I help them achieve their goals and dreams by restoring, rebranding, and rebuilding their credit score, right? I teach them how to actually build wealth with OPM, other people's money. I, again, am Chanay Robinson, and I am now going to turn it over and let my co-host Amber introduce herself to you guys.
Hey, happy Wednesday, everybody. My name is Amber, the tax lady of Whitehead Tax and Financial Services, where my mission is to teach you, the entrepreneur, how to maximize your tax deductions in order to create the lowest tax liability out there possible legally, of course. All right, I am an IRS enrolled agent. So basically what that means is I have the ability to represent you in an audit, or if you are facing tax debt, I'm able to help you resolve that. I've had clients who owe $32,000 to the IRS and we settle for $25, okay? So if you're out there struggling, contact me and we can try to get your debt resolved. So that's a little bit about me. And I will turn it over now to Pam.
Great. So, like I said, we're going to get into some nuggets that we can drop for you tonight. Really, some of those money moves. And so, I am going to kick it back over to you, Amber. Really, to tell us what do we need to be doing tax-wise before the end of the year, so we're not in trouble with the IRS and we have to call you and get that $25, that $35,000 down to $25. So, what do we need to do before the end of the year?
All right. So thank you again, Pam. So one of the things I just really wanted to talk about tonight is some of the things that you should be preparing for as tax time is approaching. Because, we're already in November. January will be here before you know it. So what I just want to say is be patient. Right? Be patient with your tax professional, be patient with the IRS. I know it sounds crazy me saying be patient with the IRS, but they were really hit hard during COVID with the shutdown. And I don't think they're gonna get back up to speed for another couple of years. Right. And especially with all these new tax laws, it just keeps coming down the pipeline, these advanced child tax credits and the stimulus. It's just causing more labor for them that they don't have the people for right now, right? So just be patient. Speaking of the advanced child tax credit payments and the stimulus, make sure you are keeping those letters. Everyone should have received a letter from the IRS saying exactly how much they were going to get for the advanced child tax payments, how much you were getting for the stimulus, the third stimulus, because the first and second was for tax year 2020. The $1,400, that was $1,400 per person, is strictly for tax year 21, right? So you need to make sure you have record of that. So if you don't have an IRS online account, I highly suggest that you go and you create one, because it's going to be important that you get your account transcript, because your account transcript for 2021 is going to show you exactly how much money the IRS gave you for those advanced child tax payments, how much you got for the stimulus, because everything is on income base. So you may not have gotten the full amount of either one. And also with the advanced child tax payments, I've heard that the IRS did some errors where they gave people too much or too little. So these are things that's going to have to be reconciled, right, with the IRS. That's why it's going to take a long time for you to probably get your refund, because as like what happened this year, if you had unemployment or the stimulus, your return automatically went over to the errors department, right? And because of that, because they wanted to validate to make sure, because you're saying that you didn't get the stimulus, they want to make sure that you truly did not get that. So they have to do their own reconciliation, right? If you had unemployment, they have to figure out, if you filed your unemployment before the law changed in March, they have to now figure out how much they need to give back to you. So I've had people that I filed their return in May and are just now getting their tax return now, right? So we're looking at a 6-month plus lead time. And I think next year is probably going to be a little bit longer if they don't figure out a good system. So it's going to be awesome for you to make sure you have these this documentation in hand now. So that way, if you're doing it yourself, you know what to put into the return. Or if you have someone doing your taxes for you, you can give that information to them. So that way they are filing a correct return for you. All right. Another thing that I think it will be great that you should be doing is you should be creating like a logbook, especially for anybody out there that, you know, has multiple jobs all the time. You leave one, you go back to one, because it's encouraged, yes, to file early as possible, but you don't want to file too early and you miss out on a W-2 that's possibly coming down the pipeline, because then you're going to get a nice little love letter from the IRS that says, hey, you forgot to report this income, and now you're going to get penalized for that, you know. So have a little check, but you know, then you say, okay, I got this W-2, I got this one. Especially what I see a lot happen, especially with some of my clients, is that if you left a job the last 2 weeks of December of 2020, your paycheck may have posted in January of 21. So therefore, you will probably end up getting a W-2 just for those 2 weeks. And it may not be a lot, but the IRS is going to say you underreported your income if you don't report that. So I always try to tell people, always kind of remember those last jobs that you left in December, because if you're anything like me, I don't remember what I did yesterday. So as fast as these months and years are going by, it's hard to keep track. So if you just keep a record of all of this, you know, as things come in, you can start checking them off. All right. For business owners, one of the things I say is right now, if you have not been diligently keeping track of your income and your expenses, this is the time now to go back through your records from January until October and start putting that package together, because you don't want to wait to the last minute when tax season happens, because that's when you start pulling your hair out, you're going all crazy because you're just like, oh my God, it's overwhelming because you didn't take the time out, you know, every single month to put this together. So start doing that, you know, now, while you have at least some type of downtime before we kind of get into, you know, busy season. All right. If you are a business owner, I hope that you have a business bank account, right? Because you should not be commingling funds, right? If you can't get a business account because you're not an LLC, because most banks, sometimes you have to be an LLC because they want to see the articles of organizations and stuff like that. You can still have a personal account, but just treat that account strictly as your business account, right? Where all your income and expenses flow through, because the IRS will sometimes audit your bank statements and they will want to make sure that there's none of that commingling of funds. And especially if you're an LLC, you don't want to do that, because now you are piercing the corporate veil. And what does that mean? It means that, hey, if that person has a good lawyer, they can say, hey, let's see how, I'll just use you, Pam, as an example. Let's see how Pam has been using her bank account. And if they start seeing that she has personal things going through there, now you are liable for everything. You don't have that protection of the business assets anymore. Now you open up yourself, and that's what we mean by piercing the corporate veil, right? Also, as a rule of thumb, which I tell people, so that way you don't have to come to me to settle any tax debt, right? Is set aside 15% of your gross revenue. You could do that on a weekly, monthly, however, whatever fits good with you and your lifestyle. Set aside 15% of that gross revenue and put it into another account. Open up a savings account. So that way it can accrue a little bit of interest and you kind of make your money work for you at the same time, right? And we're taking it off the gross because, as you know, when you go to your tax person or you're doing it yourself, you write off all your expenses. So you're always going to have way more than enough money to pay whatever tax bill that you may have at the end of the year, and or if you have to do estimated tax payments. So that way you're not scratching your head, oh, I have to get on a payment plan with the IRS, because payment plans are great, but if you're sticking with the minimum paying IRS, it's like you buy a high interest car at like 18%, you're going to be underwater. You're never going to like make that dent into that bill. So again, set aside 15%. Where do I come up with that number? That represents your self-employment tax, because that is what your money gets taxed on, right? Your net profit. All right. So definitely do that. And then just in final, I would just say, as general, if you are looking for a new tax person, for whatever reason it is, make sure that you vet them. Okay. One of the things that I find that I've come across from new clients is that when I look at their prior year return, their taxpayer information is not on the return. And what do we call that? We call that a ghost preparer, because that means it takes the whole liability off of them. So if you ever get into, an audit, you can't go back to them because their name is not on there. The IRS is going to say you're liable, right? Also, if you are going to a tax person, make sure they have some type of credential, right? Whether it's a CPA or EA like myself, or they did this course. The IRS have implemented this thing where you take this course every single year and that you pass it. And once you pass it, you are now considered a credentialed, to a certain extent, preparer. CPAs and EAs are all in the IRS directory. If you are working with someone and their name is not in that IRS directory, not to say not to continue to work with them, but ask them, why are you not listed in this directory, right? Because I know if I'm paying you, I want to make sure that you are up to date with all the laws and things of that nature that's coming down the pipeline, because you're supposed to have my best interest at hand, right? So this is a great way to make sure that you are working with a credible professional, all right? And then also, you just have to make sure that what you're doing when you pick your person, that you are confident in them, because there's no barrier into getting into the tax business, right? You don't have to have any education. You don't have to have any experience. You could just hold up a shingle and you could start your business. But you have to realize, what mind frame are they in? Are they really there for your best interest? Because remember, you are giving them your social, your date of birth, your bank account, your address, your children's information, your husband's information, or your wife's, or whatever, all in the palm of their hands, and you don't want them to go wild with that. All right. So those are some of the things I just wanted us to put out there that you should try to be preparing for and to be on the lookout for this upcoming tax season.
Awesome. Thank you very much. That was a lot of great information. And I know what you mean, Amber. I've been to what these called these shady places who just hang out their shingle and they're preparing tax returns in their basement or something. And
right.
The next tax season, you don't know where they are. So
right.
You definitely need to make sure. So listen up, people. Make sure you have a professional working on your in your best interest. A tax preparer that's what they do. They prepare your taxes. A tax accountant and an EA and CFAs and all of those people, what they do is work on an annual basis, year round, on your tax situation. So you want to make sure you get somebody who is in your best interest, in your corner at all times, and then really make sure that that they are reputable, like you said. So what we're going to do now is kind of kick it off to Chanay. She's going to tell us a little bit about the credit situation that you need to be aware of before the end of the year. And we're coming up on holiday season, and we know what happens there. What do? We pull out our plastic. And so that's one of the things that I'm going to talk about as well. But Chanay is really going to share with you some of the credit tips as it relates to this time of the year before we close out 2021. So, Chanay, what do you have?
Thank you again, Pamela, for the lovely introduction. And Amber, you gave so much good information. I wrote it all down, if you guys can see. And it takes me back to a few years ago. My cousin, she actually she heard of a guy that was, getting people so much money back on their taxes and things of that nature. And he got her back like $10,000 or something, but she was audited. And when it came to her to be, to pull out her tax return, because you're signing so many papers and you kind of trust the people that are doing your taxes. He was like, sign here, sign here, sign here. He actually had her to sign where it said tax preparer. And she did not even realize it until she was audited. And so, like you said, it took all of the blame off of him 100%, and she was left, to defend herself. So you definitely want to take heed to that, to make sure that it's somebody that's reputable and that you're actually looking where you are actually signing your name. And so, with that being said, I wanted to talk to you guys a little bit about the Christmas holiday, about credit usage, and everything else. Like Pam said, a lot of times, what we do is, it's time to spend and be jolly, for the holiday. And we might just go out and say, I'm going to go ahead and I'm going to use my credit card and I'll pay it off, the beginning of the year when I get my tax return or what have you. And I'm here to caution you with that a little bit. One, for the simple fact that no matter what happens, with COVID, your job or anything like that, those bills are going to continue to come in. And if you go over a certain amount, over 30% of your credit, usage or what have you, that's going to drop your credit score. You definitely, don't want to do that. You also want to be mindful when you are shopping online or in the store, constantly pulling out your credit card or putting in your credit card information, right? Because this is around the time where cyber criminals go on full attack mode, right? I was just notified by Google a day or two ago saying that, did you make this change? This phone number was added to your Google account. Did you do this? No, sir, I did not, right? And so you have to be mindful of things because it's the holiday season, and cyber criminals are actually 10 to 15 steps ahead of the average person, right? Our minds just don't think that way sometimes, right? And so you need to, make sure that you want to get the alerts and everything else. You also want to be careful with, you constantly putting in your card or saving your card to, these sites, Amazon, Walmart, and things like that, right? Because your information is so vulnerable. Like I said, they're working behind the scenes constantly doing things that we have no clue about. And you don't want to be, caught off guard or caught having to explain yourself or anything like that, right? Your identity is one of the most precious things that we have, and we definitely want to keep that intact. And then also, we don't want to have to pay or be charged for something that we didn't do, right? And so you want to be mindful of that. And one of the things that you can also do is you can go out and purchase like a prepaid debit card, right? That's not connected to your bank account. It's not connected to anything in your wallet. And you can, put the funds on that and spend that. It's not affecting your credit. It's not affecting your credit limit. It's not affecting the usage or anything like that, right? And it's also helping to protect you. I know that they also have like digital credit cards or debit cards that you can use, kind of like a ghost card, where the numbers on the credit card that is digital is actually different than what your actual debit card, or credit card may be. That is a way to help, to protect you from identity fraud and cyber attacks as well, right? You want to do any and everything that you can do to protect yourself. One of the things that I teach my clients, as far as with their credit cards, one, you want to apply for credit cards honestly that offer you something, that offer you some type of reward, right? A lot of times when I help my clients and they are able to be approved, for credit cards and things of that nature, they're so excited, like, oh my goodness, I got approved, yay. When in actuality, the credit card companies need us, right? They're in business to make money. If no one is using their services, they're not making any money, right? And so they are just as lucky to have us as we are to have them. And one of the things that I teach my clients are, we don't apply for any type of credit card that does not offer us any type of reward. The days are over from us just using a credit card and paying it. I need a discount on my gas, my groceries, my travel, something, right? So no more applying for credit that does not do something for you. You definitely do not want to go over 10%. 30% is the norm, but I say 10% because anything could happen at any given moment. It's not if an accident is going to happen, it's when an accident is going to happen. And with the weather changing, things are getting cold here in Maryland. We just had freezing rain and, everything else. And God forbid something happened when you go to turn on the furnace, it doesn't work. And you're like, okay, that's a big bill. So if you stay under the 10% threshold of using your credit cards, if something big like that happens, then you have the available funds to take care of that emergency without going above the 30%, threshold. So that's a good rule of thumb. And one of the ways you can do that again is, I know some banks offer like the savings accounts where you can put your money, in the savings throughout the course of the year, and then you can, take the funds out. Take it, get a prepaid debit card, and use that. Not only does that help you to protect your credit card, your credit limit, your credit card, your credit score, but it also helps you to stay on budget. Okay, because now you don't have the quote unquote freedom to go overboard and say, well, you know what? I was only planning on spending, $1,000 for Christmas this year for everyone, but I have $2,000 credit limit. So when you don't have that flexibility, you only have what's on that prepaid debit card, that kind of helps to keep you on track and things like that. And also, what I wanted to let you guys know, with the end of the year coming, the new year is right behind it. And what a lot of our creditors do is they know that we make New Year's resolutions, right? And one of the resolutions that is so popular is, I'm going to fix my credit. I'm going to get my finances together. I'm going to do, this. I'm going to do that. I'm going to pull my credit. I'm going to raise my credit score. They know that, right? And what they do is they start bombarding you with a lot of collection letters. I'll get into it in another show as far as how to actually handle the collection letters, but they're going to start bombarding you with the collection letters because they know that this is the time of year where people are like, I'm going to, pay down my debt to raise my credit score. As soon as my tax refund comes, I'm going to take care of this. Just know that paying a collection does not do anything to raise your credit score. I'll get further into it on another show, but I just wanted to put that out there, for you guys to let you know. Oh, wait a minute. I'm sorry. Also, when you apply for credit cards, make sure that you have, it's like a protection plan to protect you against any type of, fraud or unverified purchases as well. I used to think, back in the day, well, my credit is so horrible. If anybody did try to hack my credit or steal my identity, they would be so pissed, because my score was so terrible, right? The days for thinking like that are definitely over, because there are so many other things that they can do with your information that you don't even realize, regardless if you have good credit, bad credit, excellent credit, or no credit. Like I said, they are 10 to 15 steps ahead of us. Another way to safeguard yourself is through credit monitoring. You definitely want to have a service to alert you, in case, someone tries to open up new credit that you didn't do, right? You want to be made aware of it as soon as possible. With a lot of the free companies, they may alert you, but they may alert you a day or two later. The damage may have already been done. You want a service that is going to notify you as soon as the transaction happens. Also, what you can do is you can actually freeze your credit reports through the 3 major credit reporting agencies. Notice I did not say credit bureaus, because that's not what they are. They are credit reporting agencies, okay? But you can freeze your credit report from those 3 agencies, and it's actually free to do. You can actually do it online, or you can give them a call. They will give you certain information that you only have to unfreeze your report if and whenever you need to do it, right? What I want to let you know is that when you freeze your report, what it does is it stops any new accounts or inquiries from happening. The previous creditors that you may have had and have had access to your credit report, they actually still have that access, okay? What this does is it eliminates and it alleviates any new inquiries or possible any new credit accounts being opened in your name. That goes for you as well. But you will also have the information needed to unlock your credit report so that you can, apply for credit or anything like that. Those are just a few tips that I have for you. I definitely want you guys to be safe, happy shopping. Don't spend too much. Happy holidays. And I'm going to turn it back over to Pam.
Great. Thank you very much, Chanay. That's a lot of good information. I was in a training a couple of weeks ago at a conference, and it was all about cybersecurity. And like you were saying, these hackers are 15, 20 steps ahead of you.
Yes.
And what they are looking for, primarily, of course, identity theft, but is to really look at taking your information, regardless if it's good, bad, or ugly, and they sell it on the dark web. And that's how they get you. So, definitely get some good information that we need to adhere to as we're opening up those wallets and getting online. And I think you had mentioned before, hoing and getting all these presents for people, is that we also need to make sure we're safe while we're doing it as well. So what I want to do is really share some financial planning tips, and it's going to be a common thread throughout, because what we do is all kind of layered together. So there'll be some things on about credit, and there'll be some things on there about taxes as well. But I'm going to call it kind of my 15 in 15 minutes, because I have about 15 minutes to share with you. And there's about 15 things on this checklist. So take good notes, guys. And if you miss it, of course, this is being recorded. You can always go back and listen to it as well. But what I always share with my clients during this time of the year is kind of going through this 15-point checklist to make sure everything is taken care of, and kind of wrap up the year financially in a nice bow, as I mentioned before. So number one is make a budget and review your spending. Everybody hates the dreaded B word, but we do need to look at that. And Chanay had mentioned, as we go to into holiday mode, budgets are often blown. So really, if you are on a budget, you definitely look at some of the areas that you may have increased costs or spending during this time of the year. Thanksgiving is around the corner, so the extra dinners, the extra groceries, things like that, and of course the holidays, the presents, the gifts, the holiday parties. Just make sure you have a budget around that and the spending, and keep within the limits when you're doing so. The next one is really checking your progress on paying down debt. Chanay had mentioned your credit cards. This is also where you want to evaluate what you have done for the year. How did you do? If at the beginning of the year in January, what I often hear is, I'm going to pay down debt and do better with that. This is the time to check in on that to see how far you have progressed in paying down that debt. So you want to check your progress on paying down your debt. You want to review your savings progress and get set goals for 2022. So again, if at the beginning of the year, January, I hear it a lot. That's the common thing. I'm going to get my financial house in order. I'm going to do more savings. This is the chance to really review the savings progress as well. Just like what you did with paying down your debt. How far have you come with saving? Your savings program. What do you have in your emergency fund from the beginning, what you set for the beginning of the year to now? We basically have one more month left in this year. Are you close to your cash reserve or emergency fund savings goal? Really just checking in right there on your progress towards that particular goal. You want to contribute to your 401k programs or your 403b or whatever employer retirement plan that you have by December 31st. If you are maxing it out, this is where you want to look at that paycheck to see the year-to-date contributions that you have. And if you are close, then you want to see if there's a way with the several paychecks you may have left to make that max number. If you are over, we definitely want to make sure you get money out of there. You don't want to have to visit Amber because you've made too much of a contribution to your account or do the excess out of it. So you want to make sure that you are, if you are underfunded, that if you're a little bit where you need to be, how many more paychecks do you have? And then is it feasible to put more in there based on what you have left? If you are over, you want to know that sooner rather than later to file the forms to do the excess out of there. But you want to look at your contributions to your employer retirement plan. So that's your 401k, your 403bs if you're in government or the teachers, and then of course TSP for federal workers. Consider a Roth conversion. That's really looking at how do I convert a traditional IRA into a tax-free vehicle such as a Roth IRA. You do have to pay taxes on the conversion in today's dollars. I'm sure Amber would get all into this is the lowest tax environment we're ever going to be with the deficit and the debt that we have in this country. There's nowhere to go but up in our tax situation. So this may be an opportune time to convert pre-tax money or tax money, taxable money into a tax-free bucket for a conversion. I know nobody likes to pay the tax on the onset, but just think about paying a tax bill of 20% versus maybe 38 or 39%. Who knows where it's going to go, the uncertainty of where it can go in the future. So you may want to consider that as well. They are also looking at closing that loophole fairly soon. Congress has looked at closing the backdoor Roth. That's what a Roth conversion is. So you want to do it sooner rather than later if that tax loophole is closed. So you want to look at that before the end of the year. You want to also review your asset allocation, rebalance your portfolio. I always tell my clients this is the time of year before, what Chanay said, the ho, ho, ho goes on and the eggnog comes out and the cookies and all of that. You want to make sure you review your portfolio to see how things have performed throughout the year. Because once, this time of the year, once Thanksgiving happens, it's fast forward and we don't look at these things again until January. So let's try to do that prior to Thanksgiving to look at what your portfolio has performed, what the rates of returns are, if the asset allocation is still appropriate for you. If it's not, then you can make some adjustments before the end of the year. You want to also review your beneficiaries on your accounts. This could be your investment accounts, especially your retirement accounts through work, making sure your beneficiaries are solid and on there. I had a conversation just this week with a young couple, and I'm sure probably Amber, you probably can attest to this as well. They just got married. And so I think they've been married for about a few months, but his brother was still on his 401k as his beneficiary versus his wife. So you want to make sure you change and update your beneficiaries on a regular basis. You don't want any oopses like that. I'm sure his wife would not have been very happy to find out his brother got most of the 401k money in the event that something happens. So check your beneficiaries regularly. I always recommend an annual review this time of the year, beginning of the year, but just make sure it gets done. Harvest tax losses. Again, you want to go to a reputable tax person who knows how to do this. And what it is really, are there investments inside of your portfolio that were what I consider dogs? So they lost, and you want to maybe offset that with some gains. If you took some capital gains, you can take a capital loss against capital gains and then basically harvest the tax losses. And of course, a qualified, reputable tax accountant would be able to help you determine what that looks like. As a financial advisor, I say, hey, let's maybe do this, but on a tax basis, you want to consult your tax professional as well if you're going to look at harvesting tax losses. You want to check your flexible spending account balances. This is the time of the year. If you put money into an FSA or an HSA, you have to have, with a flexible savings account, you do have to have done the services in this year. So between now and December 31st, you need to use. You don't have to use the dollars until March of next year, but you do need to have the services performed before the end of the year with your flexible savings account and your health savings account. So check on the account balances, and also if there are services that need to be done to use up those dollars, you want to make sure you take a look at that. Complete open enrollment, select employer benefits. This is the time of the year where a lot of employers have open enrollment season. Don't just set it and forget it. A lot of times when we go to our employers, we do the set and forget it and we don't reevaluate. New carriers, new benefits come on and off at any given year. Just take a glance at where your benefits are just to see if you do have the best program that is available through your employer. So during open enrollment, just take a double check to see if there's some new things, or your plan may have changed and is not available at all. So you want to know that as well. This is the chance where you, what Chanay was mentioning, get a copy of your credit report. You want to go to annualcreditreport.com. Freecreditreport.com is going to charge you money for it. So you want to look at annualcreditreport.com. Chanay will tell you you do have access to the credit reporting agencies. You get a free copy every year. So you can do it at the beginning of the year or end of the year, but just make sure you grab a copy of your credit report and know what's on there. I had a client that hadn't looked at her credit report in probably 20 years. She really didn't need to, she had a lot of finances and her credit score was fairly good. So she didn't feel the need to check her credit report. I'm saying get your annual credit report every year to see what's on there. Just like Chanay was mentioning before, the credit monitoring is an excellent way to know what's coming on or off of your report. So as soon as if someone applies for credit, you will get an alert immediately to let you know that something's fishy is going on with your report. So you don't want any nasty surprises with your credit report when you go to apply for credit. That is not the time you want to find out if something is bad on your credit report. Is when you're sitting at a car dealership or at the mortgage office trying to get credit, and then there's some adverse credit history on your credit report. So get a copy of your credit report annually. You also want to pay down your credit card debt, which I had mentioned before. Review your credit card benefits and reward offers. I love that, Chanay, that you had mentioned that. A lot of people are just going around with normal cards. There's so many other benefits to these cards these days. Travel rewards, for travel, for spending on groceries or gas and those sort of things. So you want to make sure you have that and check the benefits and also the reward offers once again. Apply for new credit cards and save money. So this is the chance where you can do that as well. And then, of course, the last one is really reviewing your insurance policies. This is the time of the year where you want to reevaluate your auto insurance, your homeowners insurance, any life insurance policies. This November is long-term care insurance awareness month. So if you have been contemplating on getting a long-term care insurance in place, this may be a time to kind of look at some options in those areas. But you want to review your insurance policies as well before the end of the year. Make sure they're still effective. A lot happens to us throughout the year. So we could have gotten married, divorced, new children. we need to evaluate those life insurance programs to make sure we are adequately covered for life events or changes as well. So those are really kind of the 15 and 15 that I wanted to share with you guys. I know we have kind of the live feed going on. Do we have any questions or answers right now?
We do actually.
Okay, for me, what does the future
We have
hold
a question. Go ahead.
Is that
I'm sorry, from Larry Porter.
from
He
Lauren?
wants to know from Larry Porter.
Okay.
He wants to know, what does the future hold for cryptocurrency?
Yeah, I know. I get that. That's a common question that I get a lot of times, and I'm still, evaluating it as well, Larry, to see what the validity is of it. I know it's one of those hot new things everybody's into, cryptocurrency and NFTs and all of those things. If you are going to invest in it, you want to make sure you're cautious going in. This would be money that you can afford to lose. I call it the workhorse and racehorse scenario. So if you have your investments in your retirement account and all of those things, those are your workhorse, your slow and steadies, that's tried and true. And then you would have your racehorse money, which is basically the money that you could afford to lose, more speculative type investing, which would be cryptocurrency and NFTs and all of those particular things. But do your research. Of course, digital assets are probably going to be around for quite some time. How many times have you used your debit card and or PayPal's or Apple Pay and all of those things and have not used physical what they call fiat currency? We just haven't in a long time. So I think the digital assets are probably something that's here to stay. But if you are getting into cryptocurrency, just make sure you do your research, proper research. Any other questions that came through throughout our conversation? Nope.
No, not on the feed.
Awesome. So, I just kind of want to go back into, some of you guys' conversation and just kind of go through some of the highlights there. I know with Amber, I know I had a few questions that I get a lot from my clients is that, especially now because the IRS is just so backlogged on that. How often are people, or is it regional when it comes to kind of audits? What I get a lot of times is that people say, well, I can get away with this because, our region is not as audit proof or something like that, where they may not, or a certain class of people. What I was reading lately, which was very interesting, is that they were going after the earned tax credit, and anybody who had that on there is kind of not liable, but open to an audit situation. Any thoughts on that, Amber?
No, you're exactly right. Unfortunately, they don't want to look so much on the higher income people because they know they have money for lawyers and things of that nature. So they look at the little people that are getting this earned income credit, and the earned income credit is definitely one of the major areas that is audited because it's such a huge credit. Like, that's why people can come away with $7,000-$10,000 on a refund, and it's mainly because of their earned income credit, because they're low income and they have multiple children. So that's why you get children that's being claimed that's really not their children, so that gets audited, as well. Then you have people that create fake businesses to lower their income down or boost it up just so they can meet that ideal line. I did a review for somebody, and it was crazy because they had two Schedule C's. One was, it said Inc., and that was a red flag to me anyway, because if you're an Inc., you should be filing a corporate return. But it was like for like $90,000, right?
Wow.
And then they had a Schedule C, another Schedule C, for like $70,000 of expenses, no income at all. And when I looked at the earned income credit schedule, they were only like $100 away from the full amount of the earned income credit. I told them, I said, you're opening yourself up for audit. That was on them. So yes. And then for audits, how it works for business owners, if you have to put in a code, right? your classification code. That is what the IRS uses to figure out should you get audited or not, because they have their own algorithm. Okay, I'm a tax professional, so my code is whatever. They know the average tax professional makes this amount of money, has this amount of expenses. So if I come outside that outlier, then that's when an audit can happen, right? So that's how those things are guaranteed as audited. And then just the other fact is just random. So it doesn't really have anything to do with the region that you're in. Is the earned income credit mainly, or your business expenses and income looks a little shady?
Okay, that's definitely good to know. You know, to try to stay within that box. So you know, it's something that goes off as a red flag. You know, you're definitely open to that as well. And I know people don't like it to do so, but you need to keep your receipts on a lot of this.
Digital copies.
If something happens and comes to you for that. Was there an additional question, Chanay?
We have a question, but I wanted to ask Amber, let me ask you this. So for years, I had been claiming my son, right? And everything was perfect. Everything was fine. And then one year I let his dad claim him, and he was basically refused. He could not claim him. And when I asked someone about it, they said that the parent who provides the health insurance coverage or what have you is the parent that is allowed to claim the child or whatever. And I was just wondering, you know, is there any truth to that, or had you ever, you know, heard of that before?
No, there's no truth to that. So what you should have did was, there's a form, I think it's 8821. I can't remember the form, but it gives you sign off on it saying you are giving your child's father the right to claim. Now, the thing is that he cannot file head of household, or maybe not be able to get the earned income credit depending on the situation. But he could still claim just to get the child tax credit and So, but you just have to sign that off, and then he has to, that gets attached to his return. So that way when the IRS looks at it, they say, oh yeah, Chanay said, okay, it's good for him to claim, you know, your son.
Okay. Thank you. And then we have a question that it says, what is the best way to recover from bankruptcy? For me, never apply for it in the first place. No, I'm just kidding, because there are instances where you definitely, you know, have to file bankruptcy. From my point of view as a credit restoration specialist, let me just tell you guys, credit repair is not removing negative items from your credit report, right? For the most part, honestly, we know that we did not pay that Verizon bill. We know that we still owe Comcast. We know that we didn't pay Visa, right? So to be honest, it's not removing the negative items. What happens is the credit reporting agencies, it is their duty to report accurate information, right? Across the board. And so what happens is there are instances now more so than ever that it is incorrect information on your credit report. And so for me, when I dispute or when I repair credit, you know, credit restoration, what I do is I dispute the errors that are on your credit report. And 9 times out of 10, the errors are connected to a negative account. So I don't attack the negative account. I attack the negative information, not the negative information. I'm sorry, scratch that. The incorrect information that is listed on your credit report. And no matter what information is listed on your credit report, if it contains errors, it can be disputed and possibly removed, right? And so no matter what it is, no matter if it is, you know, a bankruptcy, a collection, and even student loan debt. Now, let me say this. The fact that it is removed from your credit report does not negate the fact that it is still outstanding and it is still your responsibility. It's just not listed on your credit report.
Mm-hmm. Exactly. And, just to kind of chime in on that question, best way is really, as Chanay was mentioning, it's going to be on your credit report for at least 10 years. So that you have to deal with that. And actually, it does clear the slate. I'm not a proponent of filing for bankruptcy unless it's an absolute emergency situation. A lot of times people, it's like they give up, they're inundated or overwhelmed with bills, and they're like, I'll just file for bankruptcy. And that may not be the best case. And there's a variety of different ones. There's Chapter 11, Chapter 13, whichever one you want to. If you're in good faith, want to pay, you may want to do, I believe, Chanay, is a Chapter 13. So, just kind of restructure so you can end up paying those off as well. And that way you're in a recovery mode. They know you're in good faith, you want to pay. Maybe you just had hard times and you end up filing for bankruptcy. The other way, a lot of times people just clean the slate, and then the next thing you know, and I'm sure, Chanay, you get that a lot, is that now they're back out, applying for so many credit cards, and they're in the same situation that they were in before. So you want to give yourself some time for recovery. Like I said, it is what it is. It's going to be on there for quite some time, but be cautious. Start, accumulating cash, your cash reserve. Try to limit the usage on the credit cards. Start small, because you do need to start rebuilding your credit back up again. But you don't want to go whole hog out there, applying for credit once again with a bunch of different cards. So take it slow in the recovery process. And that's basically how you do it. And you want to get different forms of credit as well. The credit card, maybe an auto loan, things like that, because it factors differently with your credit score as well. Any additional questions there? Okay, awesome. So we're gonna kind of close out, but we have three of us here, so we're going to share our information on how you can stay connected with us and get in contact, especially if you had additional questions that you didn't get a chance to ask in this particular show, or something pops up and you look at the replay and you're like, hey, I really want to have that answered. How can we get in contact with you? Let's go ahead and start with Amber.
Well, I'm on Facebook, so as Amber Whitehead EA, or my business page on Facebook is Whitehead Tax Financial Services. My website is whiteheadtax.com, and my Instagram is Amber the Tax Lady.
Awesome. Chanay.
I too am on Facebook. It's Professional Credit Diva. Instagram, it's Professional Credit Diva. My personal page is Chanay Robinson. My website is theprofessionalcreditdiva.com. Also, what I would like to let you guys know is that I do offer a 30-minute complimentary consultation. And what you would do is just text your first name and complimentary consultation to 443-973-7555, and I will send you the link that you can schedule your 30-minute complimentary consultation. I go over everything with you guys that's listed on your credit report via Zoom, so that I can explain to you what's in every section, what your credit report is actually saying, and what it should be saying.
Awesome. That's great information. And of course, I'm Pamela Sams. My firm is Jackson Sams Wealth Strategies. I do too offer a complimentary 20-minute consultation where you can just give me a call. You can email me at pamela@jacksonsams.com. That's JACKSONSAMS.com. So you could request your complimentary 20-minute session with me, really just to kind of go over what you're currently doing financially and some things that you have concerns, and we'll spend some time together as well. I am on social media at Jackson Sams Wealth on Facebook and Instagram. If anybody's on Twitter, they can contact me on Jackson Sams WS. They only let you get a little bit of characters on Twitter, so I have to abbreviate Wealth Strategies to WS. So I'm available on there. And of course, you can reach me on my website at jacksonsams.com. There's a wealth of information on there, videos with different concepts. There's a glossary on financial terms. It's a lot of good information that you can have on that site. So those are some areas, or some ways to reach me on that. Any final words, ladies, before we close it out?
I do offer free consultation too.
Okay. Yes. We all need to, be out here offering things to people. So that's great. That's great. Shanae, anything?
I
Any
just
other?
wanted to say, that great minds think alike. And I believe we all offer 30 complimentary consultations because we are truly here to help and to educate folks, and sharing that knowledge, that information. We would definitely do it. And so that's why we offer the complimentary consultation. Guys, take advantage of it, because you don't know what you don't know.
Right.
Yeah, exactly. That is definitely well said as well. So if we don't have anything else, thank you very much for tuning in. This has been Amber, Shanae, and Pam, your three angels of finance, really bringing knowledge and guidance and protection on your financial journey. Tune in next time for us. We are on the first Wednesday of each month at 7 Eastern Standard Time. So make sure you mark your calendars each first Wednesday of the month to get solid financial planning tips, tax tips, and also credit tips from us as well. We got you. Make sure you join next week, Women in Business, and at 7 o'clock Eastern Standard Time. Thank you very much, and hopefully we'll be able to see you again next month. Good night, guys.
Good night.